This is On the Money, both radio and TV and video with Ryan Wheelis. He's the founder of Allied Wealth. He's a financial advisor. He can put together your financial flight plan. I'm just Spike Spangle here along for the ride with my good pal Ryan Wheelis. Ryan, you have been doing a lot more videos out here. When we're doing the radio, there are live operators standing by, but there's a lot of different ways that folks can still reach out to us. RetireNowHouston.com. They can still call that phone number and be able to schedule an appointment, correct?
Or sure, 844-944-7555. You can call that number anytime. We always have someone there answering the phone. And Spike, we do that because we have a TV show that runs at 11 p.m. at night on Saturdays, right? We're not in the office at 11 p.m. at night, folks. Make no mistake about it. But we do have operators standing by to take calls and that sort of thing. So,
all right.
Always somebody during the show, after the show. We prefer you call during the show because it's fresh in your mind. Don't just make us a refrigerator magnet, if you will. But we're there.
But if you are online, if you're on your phone, you're watching us on a YouTube video right now, go to RetireNowHouston.com. You can schedule an appointment right there. There's lots of free tools actually on RetireNowHouston.com. Your retirement tax calculator. You can find out when Ryan and the team are going to be doing new live events. You do them, I know, several monthly. A lot of them you do, but you've got a lot of the other teammates out there, such as Matt Stevenson, the Blade, does some of the live events as well. And you've got tons of financial advisors. We're just trying to get the information out. This is our mission right now, is to get people as educated as we possibly can, because our retirements have been put into our own laps. Ryan, from this recent Gallup poll, 36% of Americans say that real estate still is the best long-term investment. Now, here's the thing. They did it over a 30-year timeline. If you looked at real estate and put in, let's say, whatever was going to be in your mortgage, $2,000, $2,500 a month, and you put it into real estate, this according to the Schiller Home Real Estate studies that they do every single year, your real estate has probably grown 308%. Do you know what the S&P 500 grew? I mean, I'm not trying to gotcha you, but you probably have an idea.
Hold on a second here, okay? Home is not an investment. I'll say it again. Your home is not an investment. Now, am I saying that you can't buy a home for $100,000 today and sell it 5 years from now for $200,000? No, I'm not saying that, because you can do that all day long. I did it myself, by the way, okay? But here's the situation. To live in that home, what must you do? I got to pay a mortgage. I got to pay interest on that mortgage, okay? I got to pay power bill, light bill, phone, not phone bill anymore, really, cell phone. I got to pay utilities,
water, energy, whatever else.
Property taxes, repairs, okay? Folks, that's not an investment, all right? An investment returns money to you. And you say to yourself, okay, Ryan, well, I bought it for $100 and sold it 2 years later for, 5 years later for $200,000. Sure, you made money. But the bottom line, folks, is this. If you think your home is an investment, you're doing yourself a disservice. People will rationalize and justify buying too much house because they think it's an investment. And let me prove it to you, okay? Let's just say your mortgage is $3,000 a month, all right?
Okay.
So let's do
reasonable.
$3,000 a month into our payment. Let's use 7% interest per year. It's a number I like to use often. And let's go 10 years on that, okay? So that $3,000 a month times 10 years at 7% growth rate grows to $519,000, okay? If you were paying $3,000 a month, you're probably living in about a $250,000 house, okay? And if that property doubled in 10 years, yes, you would have $250,000 back, all right? So you made $250,000, okay? But guess what? You made money on equity only. You didn't invest the money you're paying out each month, all right? So that $250,000 in equity, you really didn't make any money at all. All you're doing is recapturing what you paid into the house. Where if you'd put it into just a savings account at a 7% growth rate with some investments, that same $3,000 a month grew to $520,000. So it's a big number, right? And so the reality is a home is not an investment. Now, believe me, folks, some of the biggest lump sum returns I have ever had have been from real estate. There's no doubt about that. I have flipped lots. I have bought houses and rented them out for a period of time, but someone else was paying the mortgage and debt service on the property, not me. Their rent was, okay? and then I would flip that house and make a profit on the sale as well. Okay, that's an investment, but I never lived in my property or on my lots that I've had, or my commercial buildings or apartment buildings I'm an investor in. I don't live in that stuff. It's purely an investment. So if you're paying to live there, it's not an investment. If someone else is paying to live there and you're making money off of that, then it becomes an investment. So it's all in how you see it, Spike. And real estate is a great thing, but if you look at a 30-year period, the challenge is you had the financial crisis of 08-09, where people just got wiped out big time, right? And now what's really interesting is people that own homes today, they're not selling them. Like the people that are bought mortgages or bought homes and have these 2% mortgage interest rates, 2.5%, they're not going to sell that home, because to get a home today, maybe they're living in the, call it 4,000 square foot house, and they want to go to the 8,000 square foot house, and they got the money to do it. So they go look at the rates on an 8,000 square foot house loan, and they're as high as 7% right now. Now they've come down some, but who's going to leave a 2% mortgage for a 7% mortgage? It ain't going to happen. All right. So it's interesting that that's happening in the housing space.
Right. Even the downsizers, even if they're looking at 3, 4, 5 years away from paying off the mortgage, they're not getting rid of that, because it's 2% money, 3% money.
Yeah, I mean, and why would I pay my mortgage off right now when I can take $100,000 and put it in a 5% money market account, and I'm paying a 2% mortgage? I'm not making that transaction. That doesn't make any sense, right? So, Spike, it's interesting. And then you look at apartments. I have a substantial amount of money invested in apartments. We're getting our clock cleaned right now. Okay, why? Because when you finance apartment deals, you do it on floating rate loans. So our rates have gone up dramatically, and then we have to buy these things called rate caps from our lenders. The price of those have gone up as well. So the margins and the profit margin we expected from these apartment deals I'm in have shrunk dramatically. All right. Now, is that anybody's fault? Did somebody screw up, or was there a fraud or something? No, it's just a function that rates went up. Nobody saw rates going up the way they did, but it happened, right?
Yeah.
So the real estate market is not as volatile as the stock market, but it's certainly not without risk. And if you're going to buy real estate for investment purposes, you buy it for investment purposes. You don't buy it to live in. That's a totally different ballgame.
Okay. Is this, correct me please if I'm wrong, and I'm sure you will, is this a version of opportunity cost where somebody says, well, I know that I can get 3 or 4 or 5% a year, but you don't realize that you could have been getting 7 or 8 or 10 or 12% over here?
Spike, I love it when people say that, they offer their clients these fixed annuities and fixed index annuities and bank CDs, right? You can't lose money. Well, that's true. You can't. You can't lose money in a fixed annuity, a fixed index annuity, a bank CD. You can't. It's not going to happen, okay? But does that mean you're not losing money? Well, yes, you bought that fixed annuity for 5 years at 5%. Cool, with $100,000. Well, you could have bought NVIDIA stock and been a bazillionaire. All right?
Yeah.
What is that? That's opportunity cost. Okay? That exists in any investment that you do. You can't escape that, right? And it goes the other way too. Hey, I bought into this company that was supposed to go public. They made great widgets, and it was supposed to be good, and it went down 50%, and I lost half my money. Well, the opportunity cost is there's also opportunity risk as well, right? So, it's just one of these things where there's always risk associated in any investment, whether it's an opportunity cost, potential loss of capital. I could have done this when I did that. It's always there. And Spike, I think that's why it's just really, really important to have the perspective of a good advisor who does this kind of stuff. And folks, I don't just tell you what to do. 9 times out of 10, if I'm recommending something, I probably have money in it. And if I don't have money in it now, it means I don't have anything coming mature to put new money into. Right, so I try to drink my Kool-Aid, man. I mean, that's just I believe in that, right? And so,
because you're saying that you do have other outside real estate investments, but it just also sounds like you have other things going on as well. So, can you give me an idea? Percentage of portfolio. I'm just worried because the American public seems, again, from this study, and this was from the Gallup poll, saying, well, throughout a 30 or 40-year working career, let's pay this house off as soon as possible. They're loading money into that and not realizing that if they could be loading that exact same money into a portfolio at the same time, that the portfolio itself, and I know that there's risks in the portfolio, it just seems like America is more comfortable paying off that house and loading up into that through our 30s, 40s, and 50s than they are loading that into their investments.
It was the American dream, man. And then I think people just had the misunderstanding that your home is an investment. It's just not. Yes, you can flip the house and make money on it. I'm not denying that, but it's still not an investment. To me, an investment, I put $100,000 into it. It cooks for 5 years. I get $300,000 back. Okay. I put $100,000 into it. It pays me monthly income. Whatever. That's an investment. I don't have to pay to house the investment. All right. So if I'm in a fund and the fund needs more money, they call that a capital call. Like I got to put more money in. I don't like that. That means I'm now paying to be in this investment. I don't want that. I made my initial investment. That's what I expected to put in. I expect my returns. I expect return of my money, return on my money. Okay. I don't want to put any more money into it. All right. And so you're basically in a situation to where you get a mortgage thinking it's an investment. And now you're getting a capital call from the bank each month to pay your mortgage. And if you don't pay the mortgage, they take the house from you. It's one of those things you just got to know that what things are and what things aren't, and be open-minded, folks. I think we get this like mindset about things, and we're just not willing to change or like have a different perspective. And I think that's a really short-sighted way to be, especially.
And I totally understand you, because we're very personal about money. And when you tell somebody that they've got the wrong concept of money, it's like telling them they've got their religion wrong or their sports team wrong. It's very personal.
It is very
so
personal.
When you realize that you're having to turn that screw for someone, do you take the time to explain it? Do you take the time to look? I understand your perspective.
We had a lady recently who was disenchanted with some products that she had because of where the interest rate was when she bought them. And her first words out of her mouth when we sat down and talked was, I need to take less risk, Ryan. I've got to take less risk. And I'm like, what would you have me do? If you want to take this money and put it in the market, we can. But she said, that's increasing my risk. I'm like, yeah. There's just no perfect thing out there. In some environments, things do real well. In some environments, they don't do real well, right? So I'm not saying take a shotgun approach, but have different buckets of money in your plan that do different things. And if I'm trying to accomplish hanging a picture in the hallway on my honey-do list for Callie, okay, I'm not going to go get a sledgehammer to hang the picture on the wall. Does that make a sledgehammer a bad tool? No, it's just not the right tool for that job. I'm going to get a screw gun, a level, a wall anchor, and a screw. That's the best tool for that job, okay? So make sure you've got the right tools in your portfolio doing the right task.
Ryan Wheelis, thank you so very much. Folks, if you would like to get a review on your portfolio, are you using the right tools? Are you using the sledgehammer? Are you using a slide rule where you need a tape measure? Come on, we need the right tools for the right jobs, and Ryan and the team can help you figure out what those are. Call 844-944-7555. We'll get you started on your own financial flight plan. That is a written financial plan. Your investments, your risk, the costs, real estate, your Social Security, tax, estate planning, all of these go together into a complete plan. And that's what Ryan and the team will put together for you. Call the phone number right now, 844-944-7555. That's 844-944-7555. Or go to the website, retirenowhouston.com. That's retirenowhouston.com.